My name is Michael Kitts. Tanya introduced me, I think, earlier, so thank you for that. What she didn't say was that I've now been in Australia for 4 weeks, so if I appear a bit kind of rusty or not too conversant with the language or some of the kind of local terms, then please forgive me for that. So please be gentle with me, go easy with me. What I would say, though, is that PwC is absolutely delighted to host this event today. For PwC, both healthcare and financial services are very big areas for us. They're areas that we've invested in heavily, and we have a whole raft in both of those areas of really key clients who we love to work with, and we love to develop the thinking around. And the coming together, I think, of these two areas for me is incredibly important. How will health evolve, and how will the well-being of individuals evolve over the coming years, and how will we actually pay for that and actually ensure that those things are sustainable? So those are some of the things that we're hoping to explore just now. In terms of our panel then, perhaps if I could introduce our panellists. So first of all, Brad here. Brad is Chief Executive Officer of BT Financial Group. As Chief Exec, he brings his passion for customers and experience of more than 20 years in business leadership roles to the organisation. Prior to this, Brad led the merger, implementation planning and integration between St George and Westpac as the Westpac Group's Chief Transformation Officer. Brad joined Westpac Group in 2007 as Chief Exec of Westpac New Zealand, and prior to that, Brad was Chairman of GE Capital Bank and CEO of GE Consumer Finance UK and Ireland. He drove GE's UK Six Sigma programme and was certified as a quality leader, a black belt no less. Yeah. So take care, people. In 2002. In 2003, he was promoted to CEO of GE Consumer Finance UK and Chairman of GE Capital Bank in 2004. So welcome, Brad. And I'm sure that Brad will have some tremendous insights around the paying for this and helping us to understand how we can do that. Secondly, Dwayne Crombie, then Dr. Dwayne Crombie, who's Managing Director of Private Health Insurance, Bupa Australia Group, on the end of our panel here. Dwayne brings a wealth of experience gained across both the public and private sectors in his role at Bupa. He's passionate about advocating for quality outcomes and the sustainable affordability of the sector and delivering choice, value and an outstanding experience to Bupa's customers. So that whole bit about sustainable outcomes and how we can actually make that sustainable, I'm sure will be something we'll want to come back to. Prior to joining Bupa, Bupa's private medical insurance arm in 2013, he led the care services business in New Zealand. He was formerly Chief Exec Officer of Watamata, is that the way? Help me.
That's the reasonable thing, Watamata.
I beg your pardon. I'm new to Australia and New Zealand. And their health, district health board, is extensive senior leadership experience across New Zealand's public health sector. He holds a Bachelor of Medicine, Bachelor of Surgery and Diploma in Community Health from the University of Otago, maintains his current annual practicing certificate and is a Fellow of New Zealand Public Health Medicine College. He's also an Executive Master of Business Administration from the University of Auckland. So welcome, Dwayne, and again, we look forward to hearing from you very shortly. Finally, last but not least, is John, to my immediate left here. John Piggott is Australian Professorial Fellow and University of New South Wales. How do we say this word, John?
Scientia.
Professor, thank you. John Piggott is Director of the ARC Centre of Excellence in Population Ageing at the University of New South Wales, Australia, where he's also Professor of Economics and holds the Australian Professorial Fellowship. He has a long-standing interest in retirement and pension economics and finance. His publications include more than 100 journal articles and chapters in various books, including those co-authored and both published by Cambridge University Press. He's a member of the Henry Tax Review Panel, served for several years on the Ministerial Superannuation Advisory Committee, and internationally has a consultant, he's been a consultant to several foreign governments on pension issues, including Russia and Indonesia. In 2007, he was appointed visiting professor of the, go on, help me, John.
Zhejiang
thank you. University in China from 2008 to 10. Was also visiting scholar with the Department of Insurance and Risk Management at the Wharton School of Business in the University of Pennsylvania. So welcome panel. Thank you very much for being with us this afternoon. And we certainly look forward to the panel discussion. What we thought we might start with is that obviously you understand that the agenda and the topic of discussion today is around this coming together of health and well-being, and the topic, as I think Tanya described, would my health run out before my wealth? And what I thought it might be good is if we could get perhaps 5 minutes from each of the panel members, just in terms of their perspective on the issues at large here, particularly from their sort of sphere of influence and involvement and so on and so forth. And what we thought might be good is if Dwayne kicked us off with that in terms of his insights around where we are from a health point of view and how things are moving in that direction. John could then perhaps pick up what that means in terms of the implications for the future and some of the kind of prognosis around that and how things are going to pan out over the next few years. And then perhaps, Brad, if you could pick up about how we're going to pay for it all. And I'm sure we should be writing down avidly when Brad's telling us about how we pay for our future well-being. So, Dwayne, thank you.
Sure, I thought I might just start in a completely different fashion by actually looking backwards to help us think about the future. And so I'm actually going to delve into a bit of evolutionary human biology. So just, I suppose, a couple of insights. In the human genome, we have about just over 20,000 genes. And obviously, one of the key things about genes is they tend to code for proteins. But what has puzzled us is that only a very small percentage of our genes appear to code for proteins that actually have an impact on our body. The rest doesn't seem to have a really clear function. And we've called that, the junk DNA because we couldn't figure out what it was doing. So this year, recently, there's been an interesting study. I think some of the Oxford scientists have come up with quite a provocative idea, which is they've looked back over how genes have developed and evolved over the last 100 million years. And they're putting forward an idea that of all the genes we have, only about 1% actually seem to code for a protein that actually is essential to, obviously living and functioning. About another 7% appear to switch on and off the 1% of genes. And I suppose the really interesting thing, and if I gave you a practical example, if you were a fetus of a mother that smoked, we know that on average you will have a smaller average birth weight, and you will have a propensity to think the world's more harsher than it really is, and so you will tend to store fat, you will tend to be more likely to be obese, and obviously to have diabetes. So in some way, the way your genes, the environment your genes are exposed to, affects the expression of those genes, and there's a whole science called epigenetics. So when we discovered DNA, we thought that was the answer, but in fact we now know that the environment you're in can affect the way your genes are expressed. And that is actually as important as the actual underlying DNA structure. So in the debate between nature and nurture, in fact, nurture is really, really important. And the obvious issue for us is, could we figure out to undo some of the harmful changes that you're having in the fetus or in early childhood in a way that would make you healthier later in life? And there's a whole lot of research going on in that area. I think the second thing, if I take this theme a touch further, is kind of how humankind has evolved and adapted. Now, mostly we believe that Homo sapiens became a separate species about 200,000 years ago. And essentially we were hunter-gatherer up until about 10,000 years ago, which means in real life the males spent a lot of time running around outside the bush looking for some pretty low-value food and occasionally scoring a bit of a win on the protein front. Okay? So not a sedentary job, and you could eat a lot of that food and not necessarily get fat. And we can see that in the modern hunter. There's a few hunter-gatherer societies left, and they don't tend to get heart disease and diabetes and all these other things. So it's quite interesting. So the change to being, grain-fed and being a farming community appeared to have quite an impact on humankind. Stature of humans actually reduced. And we know industrial revolution and the current big urbanization of humanity have similarly had major effects on health. And we now know there's a lot of diseases which we call mismatched diseases. So we've evolved to be a hunter-gatherer over 190,000 years, but we live in an environment with lots of energy-rich food. We sit around at meetings like this being sedentary, and there's clearly a mismatch between the environment we evolved for and the environment we're facing, which seems to be the underlying basis for a lot of autoimmune and other diseases. And again, this is probably epigenetic. So DNA hasn't changed, but the way it's expressed has changed. Last fact from me, Life expectancy, fascinating change. I don't know whether any of you have seen the Hans Rosling YouTube video, which is a brilliant 4-minute video. But in 1800, the average life expectancy, certainly of the developed world, was about 40. Okay, the average life expectancy now is over 80. So in the space of 200 years, it's doubled. So we went for 200,000 years and it got to 40, and in 200 years, it's got to 80. So you can see why we might have a little bit of a catch-up issue here, that our life expectancy's absolutely taken off, and now we're seeing a whole lot of epigenetic mismatch diseases that we probably never had to confront before. But there is a rich possibility in some of the science that we might be able to change the impact of some of our behaviours, because, last comment, the worst thing about some of these changes is they're inheritable. So we may get them, but we may pass them on to the next X number of generations. So there's a lot of room for thinking about how we could change the future that we currently face.
Fascinating, thank you. John?
Yes, thank you. Let me start by taking up that last point around life expectancy. So life expectancy is going up everywhere in the world, pretty much, nearly every country. What's interesting in the developed world is that when you look at the sources of those life expectancy increases, if you take the period, say, for the 30 years, the generation after the Second World War, most of those life expectancy increases came because mortality was declining in the early years of life, maybe the first 20 years of life. But from about 1980 to 2010, if you take the most recent 30 years, most of that life expectancy increase has come from declines in mortality of people who are middle-aged and above. So the sources of those mortality declines are different. We've eliminated in the first period communicable diseases, or reduced them. In the second period, there have been other kinds of health interventions which have extended life. But that has social implications. It means that the current middle-aged cohorts can't really rely on parental experience to guide how they plan their lives. And society in general, governments, have been taken by surprise by this decline in mortality in middle age and above. So if you look at if you go back 20 or 30 years and look at actuarial projections of life expectancy at 65, they're all wrong. They always underestimate what we're currently experiencing, what we're going to experience. So that's the first point. There's a bit of a surprise going on here. And the second point is that fertility is declining. And fertility is declining almost everywhere in the world, once again. This is a global phenomenon, not an Australian phenomenon. And the reasons for that, people postulate, they're not absolutely clear. It's interesting, the timing of fertility decline varies very dramatically across different countries. In Japan, for example, fertility declined very dramatically in the early 50s. But it was the mid-60s before it declined in Australia. So why should this be? The reason why we say Japan's the oldest country is that fertility declined in the early 50s, 10 years before everywhere else. So what that means, if you put those two effects together, is we have much greater dependence of older generations on younger generations, piece for piece, than we've ever had before. And that intergenerational transfer, some people call it intergenerational solidarity, that's being tested. I think it passes the test, but it is being tested. So one study that we undertook looked at attitudes in the European Union. And in the European Union, there are 20-odd countries, and we knew what the policies were in these countries, and we knew what the attitudes were to questions like the older generation is a burden on society. Right? And you found that the countries where most people said that was wrong, that the older generation were not a burden on society, were the countries where self-sufficiency was most encouraged, where there was most mature labour force participation, where people did most of their own saving to finance their retirement and so forth. The countries where the answers were a little bit more, yeah, there's going to be a burden, right, were countries where there was more dependence. So it was very consistent. And I think there's a lesson for policy and a lesson for financing in that. And the final point I'd make is that when we think about the health-wealth match, which is what you emphasized in your introduction, it's important when you think about the distribution of wealth that you also think about the distribution of health, because they are very highly correlated. So people who are wealthiest tend also to be healthiest, and people who suffer very poor health, particularly in later age, as a consequence of a lifetime of hard knocks, they're more likely to be poor. So the poor are the unhealthiest, particularly in the later age, and the rich are the healthiest, particularly in later age. And that correlation is something that we need to understand, because when people talk about, well, we have a very unequal society, incomes are unequal or wealth is unequal, actually, perhaps the most important component is that health is unequal.
Thank you, John. Brad?
Okay, so Michael, if it falls to me to explain how we're going to pay for all of this, you can put your pens down. I guess the point I would make to start with is that I think we're very fortunate to be able to have this discussion here now in Australia, where we've got a pretty strong economy, we've got relatively low unemployment, we've got healthy lifestyles, and we have a pool of savings of some $1.6 trillion, the fourth largest in the world, and admired globally for the system that we've got. But that's not to say it's without its challenges. And I think part of the issue for me is that I don't think it's well articulated, even from the comments so far, around what is the superannuation system there to do? You know, what is it trying to achieve for people? Is it pension replacement? Is it a pension supplement? Is it income replacement, lifestyle replacement? Is it meant to fund all potential healthcare, aged care issues that come your way in later life? So I think there needs to be a holistic approach of stepping back and say, look, how do we really want people to be able to live post-work? And I think you can see three sort of broad categories of issues there. And if you take Dwayne's point about longevity now, a person who's 65 years of age today would expect to live to a mean of 84, thereabouts, John. So you can take superannuation to say, well, how do you live from retirement through to 84? And then how do you live from that mean mortality rate to life, to end of life, is another period of time. And I think you can construct a system around that. But then what do you do for all of the people with material health issues and aged care issues along the way? Because what you can't do is develop a system where everybody saves for the worst case scenario, which is completely inefficient. And so you can come up with a superannuation system, I think, that gets you retirement through to mean. You can have some sort of annuity structures and others to get you from there to full life, but how do we deal with these other outcomes? I think when you start to study the problem, you've really got to start to separate the groups of people we're talking about, because we're focusing on today's baby boomers. A lot of the, what's the right framing there? Is a die already cast? Is that, the problem is there today, and there's not too many levers that are available to us. But certainly today's 18-year-old, when they reach 65, they'll live to a mean of 94. And so how do we want these people to live in retirement? And what are the policy settings we need to put in place there? And if you even just take the ageing effects now, today we have some 400,000 people who are over 85 years of age. In 2050, there'll be 1.8 million people over 85 years of age. And that is not some sort of theoretical argument. They're today's 49-year-olds. Right? So this is happening, and I think we're fortunate to be in a relatively strong position to others to be able to sit back now and say, look, the discussion is really about how do you want people to live, and then how do we go about starting to recognise and fund some of those things. I think a lot of the medical advancements that have been made over the last decades that have added to this longevity are also going to increase pressure on the system as well, because the way we typically deal with some of these things is through pooling of the risk and lowering the cost for people. But obviously some of the medical advances, and predictive medicine particularly, you can start to determine exactly who's going to be getting what types of issues, and that's going to have a whole different set of factors there for how do those people get insurance or protection. So what does that imply in terms of the ability to pool risk? So I think it's a good discussion this afternoon.
Fantastic, thanks guys. So just by way of kind of format for the rest of the session here, we've got a few kind of issues to discuss, and I have some questions that I'd like to kind of pick up with the panel, if that's okay with them. And if it isn't, I want to pick them up anyway. But then what we'd like to do, if possible, is to just open the comments and questions to the floor and invite questions from you. So by all means, if you'd like to start thinking about what your questions might be, that would be great. So maybe if we wait on the basis of till about sort of past or something in terms of a few questions here, and then we can open it up to the floor if that's okay. I think what struck me as I listened to colleagues here is that there is almost no doubt that we have an ageing population. There's no doubt that that is quite a new phenomenon. The point that Dwayne made, I think, in terms of the 200,000 years and 200 years, which I thought was a very striking point. So there is no doubt that we're kind of facing this tidal wave of change. In fact, we're already in it at the moment. And I guess that certainly based on my UK experience, there's always the sort of sense on the part of the public that, well, that's something that the government needs to deal with. And of course, that's their responsibility, not ours. And I just wondered in terms of what the panelists' views were around what individuals, people like us in the room here and others, what they should be doing to take personal responsibility to kind of pick some of these things up as they kind of go about their everyday lives. I don't know if you'd like to pick up that first. Dwayne, do you want to?
I'll probably give the traditional health response. I mean, certainly, what we know about what you can do personally is clearly what you eat's quite important. And there's no doubt that, and I think we all know these things, less processed food, less energy-dense food, more vegetables and stuff with roughage. There seems to be a reasonable evidence that's good for you. It's much harder to take off what you've stuck in your mouth. So, fitness is good, but it's never going to be quite as much as kind of what you eat in. There's some really fascinating evidence that if you're a little overweight but fit, or even moderately fit, you're actually got a better chance of living than if you're normal weight and completely unfit. Okay, and in fact, we can see in people with diabetes that people with diabetes with normal BMIs die at a higher rate than diabetics with a slightly higher BMI, which is quite puzzling, although there may be different variations of the diabetes disease. But, there's some interesting stuff around there. The next bit you can do for yourself is clearly around mental activity and mental well-being. What we haven't talked about here is that your health might run out, but your mind certainly is going to run out. 3 out of every 10 85-year-olds have dementia. Okay, and if you see the average age for a woman's 83 now, the very real prospect of dementia, if we don't find a way to cure it or prevent it, is going to face a lot of normal people. So clearly, doing something for your mind's important. And the other thing which is particularly important, which we know from evidence, and especially for males, is social connections and social network. For some reason, humans are hardwired to be social creatures. And if you don't have a decent social network and you're a male and you're over 50, your chances of dying are dramatically higher than if you have a reasonable social network. So there's some really, basic things that, at a personal level. And we live in the most favourable country in the world, which has community rating for health insurance. Like genetics and all these other kinds of things at the moment, we're kind of buffered from it. Because whatever you do at the moment, the system relies on people who are younger to effectively help pay for people who are older. And I think the real question is just how we make the whole thing affordable, because if the young opt out, then it's going to be a major catastrophe for the community as a whole.
And Brad, I suppose one of the things that, again, from my own personal experience, is that whenever I've asked someone to tell me how much I should be putting away for my future retirement, be it costs of care, or indeed for my kind of well-being or looking after family or what have you, the numbers always scared me so much that I never really made a start. Yeah. I don't know if other people have had that experience, but certainly I have. So perhaps you could share with us your thoughts in terms of how people should be addressing that issue either now or in the future, and when they should be starting on that journey.
Well, I think, I personally believe people should start as soon as possible on this. And I think, what I've spoken before on this topic, and I was reminded about this earlier, and I talked about my own children, about, how quickly I can talk them into, at an early age, thinking about, superannuation and long-term savings. I think the issue that you've touched on towards the end there is one of the challenges with our system now, and it was something happened in the translation between a defined benefit scheme and defined contributions, where we lost the focus, I think, on income generation. And I think the right question for people is, you know, the level of income you require whilst you're working and, you know, you're educating your children, paying the bills, buying a home, doing these sorts of things. And I'm just thinking about what is the income requirement you'll have through those phases, and certainly, you know, when you're no longer working. And so what's the income you'll require, and then working backwards from that to say, well, you know, what do I need to accumulate, what sort of products, and how do I structure the assets that I've accumulated to generate that income stream is a really worthwhile start, because I think it takes it away from this mentality of this big bucket of money that you're building. And you've got to start to say, you know, on today's numbers, as we said, you know, 65 to 84 and possibly longer. But, you know, younger people today, for retirement ages even at 70, they're going through to a mean rate of 24 years and even longer after that. And so, and then you layer on these, you know, rising healthcare costs and everything else, you've got to start to think about, how do I start to generate that level of income for that period of time? So I think the focus has got to be on income streams rather than the bigger bucket of money that I can get there.
And John, you were nodding there in terms of some of the points Brad was making.
Well, yeah, I think the framing point is extremely important, and I think we do it very poorly here. The whole of the superannuation guarantee is built around an asset frame, an investment frame, a wealth frame, and actually the purpose of superannuation, someone said, well, what is it? It's to provide, it seems to me that it's to provide an income in retirement, and we should be thinking much more about framing our annual statements to superannuation members in terms of, well, if you work to 65, you might expect this income. If you work to 68, you might expect that income. And I use those high numbers in this context because I think you said, well, what could we do? Just stay working.
Good advice for us all.
I think the value of being attached to the labour force as a mature worker is incredibly high. It's just so difficult once you leave the workforce in your 60s to get back into it. And there are a substantial number of people in those cohorts who feel they've made a mistake by somewhat impetuously retiring. They don't like their work environment, they've had a fight with their boss, whatever it might be. And they think, well, I'm 62, you know, I've got some superannuation, a page pension in 3 years, and then actually it doesn't anything like meet their expectations. I don't think we inform those people very well about how valuable it is to stay in the workforce, contributing to a superannuation plan for a few years longer. And that should be something they're learning about at the age of 30, not at the age of 60 or even after they retire.
Okay, I mean, one of the things that kind of strikes me about this discussion generally is that it's very easy to focus on what individuals take from the system later in life. I suppose the other sort of lens here which interests me is what individuals give to the system during their working lives or during their period of kind of productivity, whatever you might call it. And I was saying to colleagues just before at lunch that that certainly there is a view that by some that health spending is a bad thing and we need to control it and keep it under the caution, whatever else it might be, mainly because of budget positions and so on. I just wonder what the panel's reflections were on that, the economic contribution of health and wellbeing in terms of the contribution that makes to the country and makes the sort of broader budget position. If you'd like to pick that up first. John, do you have some thoughts on that?
Well, I think what we're about is people's well-being. We're not about a wealth figure. We're not about a dollar metric. We're about people feeling good about their lives. I'm going to avoid the word happiness, right? But people feeling good about their lives as much as they can, and surely remaining healthy and living for longer in a healthy way is a very important piece of that. So I think that we should not be bound in by the manacles of national accounts and measures of economic growth through GDP, because there's a lot more to life than GDP, and an important piece of it is around health and well-being.
But do you think that there is sufficient importance placed upon that. I mean, people love GDP and they love the kind of budget measures and they love the spending measures because they're kind of easy to get a handle on.
Yeah.
They're easy to measure. It's kind of making important what's easy to measure, isn't it? Rather than measuring what's important.
Well, I think that's true. I think we probably undervalue this in the national debate because we can't measure it very scientifically.
And Brad and Dwayne, I mean, in your introductions, I think both of you had this focus around better outcomes and so on. And I mean, where does that fit from your perspective? You and I were chatting, Dwayne, about Bupa's performance in Australia versus the UK, for example.
It's private gloating. I mean, if we come back to the basic debate of how much a country should spend on health, I mean, the thing we know is that how much you spend doesn't bear any resemblance to the outcomes that a population might say it wants for its community. Like, usually people want to have good quality life that's free of pain and suffering, and ability to engage socially and some version of happiness, I expect. We know that you can look at different countries' spends. Australia is slightly below the OECD average as a total spend on health. But again, it's about what value you get for that spend in your healthcare system that matters to the community, not how much you spend. And that would be both for you as an individual and for a country. And I think it's pretty clear if you look at our health system, even though generally it's an okay health system, there is quite a lot of wastage in the Australian healthcare system. There is quite a lot of less than good practice care getting delivered. And it, on average, is more fragmented than the average OECD country, with relatively poor integration of information and other systems into the community and primary care. So there's actually quite a lot you could do without spending any more money. It might actually be better for consumers or patients. And the challenge is, how do you get the medical profession particularly to actually have a bit more of a system view about their leadership? People have debated a modern Hippocratic oath where how you use resources for your community is actually as important as what you do for an individual patient. Because we've got to balance up these things. I mean, it's really hard to spend $300,000 a year on a drug for a particular child, no matter how deserving that might be. Because as a society, if we did that, you might close half the schools. That's the debate that we have to have. And it seems to me politicians really struggle to have that kind of mature debate. And at the moment in Australia, we desperately need to do something about making the health system spend its money better. So I certainly wouldn't be a huge advocate of lots more money for the health system, which probably won't endear me to everybody. But.
And Brad, from your perspective, I mean, obviously a big part of your business is about helping people provide for the future. I mean, is that kind of the outcome of that spend? Is that something that is important to your organisation, or?
Oh, well, I think the only thing I'd contribute to it is obviously the healthier we are as a society, the more productive we are, and the lower, therefore, the costs come down. I mean, what we try to look at in BT, from an example, is we obviously have superannuation, and we'll drive through there, but we have, sitting alongside of that, a big insurance business as well that helps protect people along the way in terms of incomes and replacements and so forth, so that if something happens, it doesn't have a material impact on their life at that point that they can't recover from. So I think, insurance through that working time, styles of insurance products, when you're finished working, need to be sitting alongside of that superannuation system, to form, a set of solutions, if you like.
I was interested, Brad, what you were saying in your introductory piece about the almost the sort of targeting of individuals based on our ability now to predict whether people would or would not be well in the future. And certainly that's been quite a big debate in the UK in terms of whether people should enjoy the benefits of pooling on an ongoing basis, even though we can predict for certain individuals that they will suffer in the future.
Well, I just think...
Where do you stand on that?
Well, I just flag it as a potential issue that I think some of these sort of aberrant outcomes that occur, you can't have everybody saving for those events. You have to have pooling of risk for those sorts of issues. And I think one of the challenges is, the more advanced we get in diagnostic medicines, the more accurately we're going to be able to predict who's going to be susceptible to something, and then you're going to have people thinking about returns and investments of capital, and you're going to have competition around price for different cohorts of people, and everybody's going to want to deal to the healthier ones rather than healthier ones, and you get inverse correlations around who needs it versus the relative price for them. So at the moment, I don't think we're there, and certainly, Dwayne,
So Dwayne,
your
I think you want to
comments.
copy on comment?
Well, just to complement that, I mean, I'm obviously a strong supporter of community rating. I mean, Medibank at the Health Insurance Summit earlier this week presented an interesting graph where the top 2.3% of their members, their frequent flyers, used 40% of their hospital claims. And I expect our figures will be pretty similar. You know, and I think apart from being shocked by the figure, I mean, the thing is, I expect that quite a few of those 2.3% didn't actually get that greater care, even though we spent bucket loads of money on them. And how could we actually produce something better? Because clearly they're bouncing around the system a lot. And how can you integrate? You know, a lot of what America's doing that's actually good is they're actually focusing on the needs of those frequent flyers, those 2 or 3%. And they've really come to the conclusion they need a lot more organised, integrated primary care and community support. And that often they end up getting a lot of acute hospital support, which doesn't necessarily deal with some of their underlying chronic.
And that's exactly, I think, what the New South Wales government's trying to push
With
on
integrated care,
Absolutely, with integrated care. And I was chatting with one of their people fairly recently, and he was saying that a similar kind of stat to what you were just saying there, Dwayne, that 1% of people in New South Wales consume 30% of health resources, which I was shocked by, just in terms of I expected it to be skewed towards certain individuals, but not perhaps as much as that. So so it's kind of interesting, yeah. So I think it'd be useful perhaps if we could get some questions from the floor. Gentleman over there.
There seems to be a discourse between the panel and the government. So if I just point to some recent correspondence that I received, some tax was introduced to reduce the tax concession on superannuation contributions for individual taxpayers with higher incomes. So Australia's top 1% who earn $281,800 pay 17% of the tax haul, which is $23 billion, and then the 10% of the community actually they pay 46% of the tax haul, and they earn $105,000. So there just seems to be, and then we have the debt tax, so they've just thrown on another 2%, so fantastic. So they just, they want us to save more, but then a sector of the community gets really penalised for doing that. And, I might be considered in that bucket, but, I'm struggling and, we've got kids and all the rest of it. So where's the government thinking this? And why do they keep meddling with that 1.6 that will be 7 trillion in 30 years' time?
So I'm not sure any of the panel are here to represent the government, but maybe...
They're not here, so you can fire away.
I certainly wouldn't even attempt to represent a lot of the discussion that's gone on, I guess, over the last 4 or 5 years there. But I guess I'll just step back for a second on superannuation and just say, look, superannuation, all it is most people here would understand, it's just tax and governance, right? I mean, it's a system that compels people to put, 9.25% of their savings away for 40 years, and for that opportunity, you get a tax concession and some stringent governance around it to make sure the money is there at the end. I think it's available to all Australians to make investments inside super and outside superannuation, and what really the tax settings are saying is, or to what extent should benefits accrue to different income levels in order to get them to save money into the superannuation system. And I think there will come a time when the opportunity for people to have an open-ended claim to tax benefits to invest in superannuation, I think will finish, because at some point it will be, that's enough, and then people will need to say, well, if I still want more income in retirement apart from what I get into superannuation, then I'll have to invest it outside of a super system at whatever the prevailing tax rates are. I think that'll just occur. Part of the problem, I think, with the meddling is that I don't think there's been a well-articulated and agreed framework, as I said in the opening, of what this is intended to do. And because of that, we have this constant sniping around, high-income earners, or superannuation money should be invested in infrastructure, or, or when there's a budget fiscal imbalance, that, we can use superannuation system to get it back in balance. And, the longevity issues we've been talking about here should really be the focus of it. It's like for this generation and for subsequents, how do we want people to live, and what's the framework we're trying to build towards, and, how do concessions and incentives get distributed, along the way. So without that framework, we're getting these reactions to things, and those, I think, you can argue the fairness of it, but they really don't have anything to do with a saving system per se. They have to do with the budget issue.
I think one of the problems, I go around the world saying that we have the best framework for retirement saving in the world and the world's worst pension tax system. And I think a really strategic mistake was made in the 80s when the tax reform was introduced, and the idea that funds, superannuation funds, should be liable for tax was introduced, because it meant that a lot of what happened with taxation of superannuation was actually quite opaque to the general public. So you have a system which gives tax breaks, but which is tied to the income tax. Then to change the tax on pensions, you have to change the income tax, and everyone knows. By introducing these special separated taxes, it's just been extremely easy to manipulate those for budgetary purposes or for equity purposes or for whatever other purpose. And I think it's been a dreadful mismatch over the last 2 decades.
Any further comments?
Oh, no, my private view is it's totally ludicrous, but it needs a more kind of organised response to sort out the whole system. If you think of superannuation as a set of incomes, then you would come up with a different kind of thinking about the whole process, wouldn't you? Between different...
Is there any sense from the panel in terms of, I mean
Well, no, the law of averages won't let you get away with that one, I'm afraid. Having run nursing homes for many, many years, I can tell you there are a lot of 80 and 90-year-olds in the world, and even a few hundreds. So.
Question at the back there, thank you.
Yeah, hi, Colin Flynn from Genpac. There's been a lot of discussion, and I think the discussion is about the relationship between health and finance, yet if you look at the superannuation system, there is no real direct connection between superannuation and then your personal health care. I've just returned after 10 years in Singapore, where your superannuation, actually part of it is parked in a thing called MediShield, which is actually allocated for the individual's health care. Interested in your views around whether that direct connection should be made in the future.
Yeah, it's come up a few times, certainly amongst the Private Health Association, which is the industry association. I think there's even a study tour to Singapore in October. I think, just so everyone knows, there's a basic scheme which you can use for your hospital care, and you have to pay for your minor pharmaceuticals and GP care yourself out of pocket. There's like an optional extra that you can purchase from the government health insurer, and then there's a safety net. Those are the bits of the system, but it's very explicit. And I think conceptually it seems really a really great idea. I know there's a reluctance to entertain it in government circles because it's like another, if you had it connected to the superannuation, it would be like another scheme where it's obvious to you what you're paying, all lined up. And already when you have super, you've got life insurance and income protection kind of in there, and it feels like there's, you're going to have to up your contribution, and it's going to be another great big hole going out. So I think that it's a great idea, and it suits that community. We would have to have a much more mature debate in this country, certainly with the politicians, to be able to even float the idea of being honest with people about just what's going on.
Any thoughts, John or Brad?
Oh, only that I'd support having a look at it. I mean, I'd just step back again to the argument that you've just got to look at how do people live and how do all of these, I mean, this stuff is just going to happen, right? It's going to happen whether you're ready for it or not, whether you're fun, it's just going to happen. and you're just going to deal with it unprepared, or we can say, we know what's happening with health, we know what's happening with age, and you can very predictably lay the patterns out, and you can sit back and say, well, how are we going to fund those things? And I think the Singapore example is a good one. There may be others. What I'd be advocating is you step back and look at that and have a good, open discussion with many interested parties. You try and agree on a framework, and when we lock around that and you don't subject it to budgetary pressures and other things, and there's clear focus that industry participants and consumers, we just get a bit of stability around that.
I think the ageing demographic means that the pressure on the public purse is going to increase, and a lot of that pressure comes from risk. So we talk about longevity risk, and sometimes you hear the remark that the government has enough longevity risk on its books, and so it doesn't want any more, and so it's not going to do X or Y or Z about superannuation or about health for that reason. It seems to me that in a society such as Australia's, the government will always bear these risks. What's important in terms of the structure or the framework is that you set that up so that the private and the public sector share that risk, and the tail risk on longevity or health costs or whatever is delivered to the government, and thus to the taxpayers, I should say, in a reasonably systematic and organised way, rather than something that's just going to happen and that they're confronted with 20 years from now in an entirely unorganised way. I think in some ways that's the crux of the debate.
Okay, another question from the floor?
Brad, we're just coming to the end of our low interest rate period, and we've enjoyed increasing wealth as a consequence of sustained low interest rates. So in your business, when you project out higher interest rates a couple of years out and then continuing, what impact do you think that'll have on consumer savings behaviour?
Well, it'll be interesting. There's a lot of discussion around what is the growth rate that we require in Australia to get continued healthy economic growth, and then that's balanced against how would that growth be funded under the current system. And without getting into a lot of the banking rules around capital that a bank needs to hold and the liquidity that we need to hold around the funding, you can get to a point where I think there's going to be more and more competition as that economic growth starts to speed up for deposits in Australia. And what that will drive is more competition and an increase in deposit rates in the country as banks and others try to source those deposits to intermediate credit. So, one of the good news pieces is as the economic cycle starts to pick up, that growth has to be funded. It's currently funded by banks who are paying for those deposits. So there could be a cycle where those rates start to increase again on the back of that growth.
Tanya?
John, I wanted to ask you, I was very interested in your comment, and I loved it actually when you said just keep working. But great, we've all got, especially the ones with high energy. But look, my question is, do we have statistics of the workforce in the over the 60s to 70s, and how many percentage of the workforce is over 60? And also, do you think we can change the mindset in this country that we actually start respecting grey power?
Oh, I think the answer to the second question is yes. I think there is. Economists tend to focus very much on the supply side of the labour market, so we're all about that. When it comes to, well, why would a firm actually hire someone of mature age, or why don't they, then economists are much less articulate, and they sort of mumble a little. I think there's a workplace culture story, and I think that's happening in some workplaces, and I can see it happening in more. We're very much a service-oriented economy, and the ageing demographic itself will drive a more mature labour force on services. the whole of the aged care sector might be an industry where somewhat more mature workers are hired. So I think the demand side will happen. It just needs some management, and it needs the opportunities to be appreciated by firms, because this is a very experienced labour force, and it's a labour force which is willing to work if conditions are right, if there's enough flexibility for them to be able to take care of their frail parents and so forth. So I think there's a bit of a mindset. In some ways, it's not that different than when women became part of the labour force in a major way a generation ago or more. And people were very nervous at the time, right? But it's worked terrifically. So that's the second question. Labour force participation generally of older people was actually quite high if you go back to the 1970s. And then increasing government grants and subsidies in that period of high unemployment that we experienced in the 70s, there was a completely fallacious view that you would create a job by retiring an old person early, right? And so retirement age, or the age at which you ceased to participate in the labour force for the last time, started declining, and it went down until about somewhere in the 1990s. Since then, it's been climbing. So the idea that people these days at 62 are unable to work is actually given the lie by the 1970s experience. On the whole, 62-year-olds today are healthier than 62-year-olds were in the 1970s. So I see there's a lot of upside potential. We just need to organize it a bit better. We need to have better incentives around working longer, and some of that has to do with pension access and superannuation access ages.
Okay, perhaps one final question from the floor, please. Who'd like the grand position of being the final question?
I'll close it out. One simple statement on Japan. If you're born in Japan today, by the time you're 70, the population of Japan will be half what it is today. Is Australia totally dependent on migration to actually fund longevity health?
The answer is no. So the fertility rate, which is a rate that you construct around the number of births of women of reproductive age, in Japan, as I recall, is around 1.3. For replacement, you need 2.1. In Australia, it's about 1.9. So migration helps, but we're nearly there before you have migration.
Brad, Dwayne?
No, I didn't want to add. Do you want to get your last question?
So we probably have got time for another one then, yeah, please.
Sorry. For Brad, what do you see as the role of the financial planning industry in all this? Obviously, financial literacy can be low across all levels of the population. Access to financial planning is, unless you're a person of means, you probably struggle to get access to good planning. How do people sort through the muddle? What do you see the future of planning in terms of trying to help people navigate through this?
Look, I think you're at a time where more people are going to need more advice, not less, more, and what I would say is guidance rather than advice, because I think it is the full spectrum from self-help through to sort of specific pieces of advice through to a full holistic plan. And I think you're right. I think, on a full holistic plan now, you want to have meaningful assets or sophisticated needs to make it worthwhile for you to have a full financial plan, done. And I think that means that, financial advisors, I think, will more and more focus on affluent, high net worth individuals and target them because, again, higher asset base, more sophisticated needs, but it means for a vast rump of Australians there, it's like, well, how do they get guidance? And how do they start to think about, creating income post-retirement, the sorts of things they need to do? And I think that's when it's going to be around even more simpler product design, self-help on internet sites, general advice on specific products and so forth, so you can expand the reach of it and lower the cost per advice situation.
Okay, thank you. I mean, I think a really fascinating discussion there, and I mean, I think what struck me really is that I'm kind of imagining a kind of Venn diagram almost with 3 circles on it, and there's something I think about supply in terms of what's actually done in the health sector to kind of keep people well, and some of the observations I think about these frequent flyers, as they're referred to, where a very small proportion of the population is consuming a whole raft of public sector resources. And so I think there's something around one of those circles being the kind of the demand circle, effectively, in terms of how we can manage down demand, how we can help people look after themselves more, and actually place a lower burden on those resources, and indeed how we can help that through earlier interventions to keep people well rather than actually get them better when they become sick. I think there's as Dwayne commented, there's a big circle there in terms of the supply and the things and the way that the actual health sector behaves in terms of helping people when they become sick and preventing them becoming ill. And on that, again, Dwayne commented on the piece around integration. And the way I think of that is really almost reversing the telescope and kind of trying to look at things from the patient or citizen perspective rather than the individual entities across Australia and indeed across the world that are responsible for certain bits of healthcare rather than it being very joined up and so on and so forth. And then perhaps the third circle is around the funding models for that, be they in terms of superannuation or other insurance provision, or indeed the government and the public sector. So I think a tremendously complex and but very interesting set of dimensions there to the sort of issue that we've discussed. So thank you, panel. If I could just, on behalf of everyone here today, just to say it's given me great pleasure and to be here, and to formally thank you for being here and sharing your insights this afternoon. As many of you know, it's the Trans-Tasman Business Circle's tradition to thank their speakers by making a donation to a chosen charity. And over the years, Circle's events have raised over $250,000 for a range of worthy organisations. Now, you wouldn't know it today, but actually today is Jeans for Jeans Day. So I actually contemplated rocking up in my jeans and a T-shirt, but I thought that may not be the best thing to do on this amongst this esteemed company. But the donation today that the Circle will make is indeed to the Jeans for Jeans Day cause, and that's a national day where people are encouraged to wear their jeans to raise much needed funding for research into birth defects and diseases such as cancer, epilepsy, and a range of genetic disorders. Every dollar raised helps scientists at Children's Medical Research Institute discover treatments and cures to give every child the opportunity to live a healthy and long life, and I'm sure we'd all aspire to that. So, so thank you for the donation to Jeans for Genes, and if you could just join me in thanking the panellists for their contributions.